Hello guys, welcome to the Trading Parrot. It's almost 10 a.m. in the morning in UK time. We're gonna discuss the price action over the weekend. I'm gonna put particular emphasis on the close that we had yesterday on the daily. That is very interesting to see that we have managed to do what I wanted. We're gonna cover the 4 hour. I'll share my thoughts about that pattern in here that could be playing out in the next few hours, so do not miss that part. And at the moment, the big whale explorer is reaching a ratio of 133, which is extremely high for this time in the market. We have to discuss about that, whether we like it or not. We'll discuss, of course, liquidation levels that are forming below the price. We'll look at the delta, the bid and ask. There's so much to cover today, guys. If you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. If you wonder why there wasn't an update last night, that's because I got invited as a guest at Paul Barron's network channel. We put out this video in here and we cover Ethereum, Bitcoin, XRP, and a bunch of other altcoins. Make sure that you don't miss it. If you pay a visit to Paul Barron network video, make sure that you leave a comment and give it a like. That really helps me to continue doing collaboration with multiple channels. And if this is the first video that you're watching on the Trading Parrot coming from this video, welcome on board. Let's have a look at what we have next week in terms of economical events. We have the core inflation rate that is expected to stay flat. China on Monday as well are going to talk about inflation rate. The expectation is to increase 2 points. That is not necessarily good. Of course, we have PPI on Thursday and a bunch of other events in Europe and in the UK. Looking at the open interest last week, you can see that every time that we want to break above 100k, we cross the 1618 on the extension applied to the open interest aggregated of all the exchanges, which is been really interesting. We were forecasting that since we were looking for a top of the open interest so we can trade it as an alpha ranging like we did in the past 8 months. So far, so good, because we are still holding below the 32 billion. And I think there's at the moment an ongoing shift between longs to shorts of that open interest, but the open interest still remains at that area. The more shorts that enter in here, then we're gonna see more accumulation of liquidations at the top, making it a lot more attractive than just breaking from this triangle into here versus into here. It's very simple, really. Most of the time. There are exceptions. We have seen many in this channel as well. It's very interesting to see that the interest on Bitcoin from Google Trends is having a little spike here again to 49 versus 65. If we look at the past performance in December, mid-December, there was some sort of depression that ended around mid-December. At that point, then we get back to put a new high. So if this history repeats, we should be expecting this small spike, very humble to 49, to eventually break out above 65 and put a new high. That is just purely based on past performance, but it's interesting and fun to watch. So far in December, we are 3% up and we are no longer tracking this with perfection. It was never perfect. Now we have this lightsaber double, I don't know what they call it in Star Wars, but it's a doji candle effectively, which we don't have in 2020, as you can see in here. What we do have still in common, to be honest, is this creeping up that is going on in here with the bodies of the candle. That could be this part, but some other people might think that this doji candle that we have here mimics what we were doing around the 20th of September, but indeed this is not really that violent like what we have this week. This is just 2.5k at the most at that area, and that is already on the second level of resistance, whereas this one is, to start with, almost $40,000 with, and we haven't even reached the first resistance, which is at 108. If we were doing something similar to that, we should have been at 120 already and move roughly 12k, because the volatility this year seems to be larger on the CPR side compared to the one of 2020. Still interesting. I'm starting to doubt if we are gonna really follow it in this aggressive move, but I'm very happy if I'm wrong and eventually we wake up with 2 candles going into the first or the second resistance, which in that case I'm gonna claim victory that I was right. No, just kidding, but I'm still gonna be happy. Alright, let's look at the 4 hour RSI. You can see that we have the breakout. This was impulsive. We say hopefully we hold on Thursday when we were coming back down at 52, but we can take that that bullet as well, and we can hold at 46, hold by this line. If we fully reset to the red, which the last time we reset is in early October, that will be a lot more painful and difficult to repair, particularly if we go beyond that point at 35 and we get a global breakdown. That's not something that we should be expecting at this point in the cycle. So Bitcoin managed to hold the red line, to break above the green one, reclaim it again. It put a high somewhere at 61. It is having a pullback with higher lows relative to these highs in here, and is preparing to potentially over the weekend have a breakout above the yellow line. Let's look at those levels in the price, because not everybody likes to see the action on the RSI only. I have moved all the targets. The red one is actually, it's not red, it's orange. The orange one, I think I'm daltonic or something. I always have issues on the weekends with the colors for some reason. Maybe it's too many watching charts and for too many hours every day. But this orange in here is 49. Let's track that we have the right values in here. So this has increased 1 point because it's got a slope, obviously. Then we have the red at 34. Let's say it's 35 now. And you can see how these values are going to move up slightly. And then the resistance is at 55. We can say 56 to be on the safer side, but I already have it in here. Let's just change the color to yellow so you know which line below is which level on the price. So the breakout will be confirmed with a 4-hour candle close above $100K, $50. So that is the breakout. So basically reclaiming 100K pretty much. So far we are holding the support at 99.2. Why is that support? Well, because it held us the first time we put the all-time high in here, and now it's holding us. So maybe in this squash of the price there, we managed to break above. Notice that this is almost like there is a line in here and there is a line in here. I'm putting the lines terribly, but it's something like that. So we got some sort of symmetrical triangle, which are coming in for Bitcoin very often these times. And that is a consequence that people are just trading the range, and the range starts becoming more narrow because people start taking profits earlier. Like first they took profit at 103, on the next leg up at 101. So we need basically the price to go beyond 100. If people take profits at 100, then that is another rejection of the triangle. That is the basic principle. Of course, if they don't take the profits, we get the breakout, and then we start hitting the stop losses of the shorts, and we can continue climbing thanks to that liquidity in here. All right, let's talk about the daily, the important stuff. So we got the volume profile showing us the range. The range at the moment, the high is 99, almost 600, and we say let's close about 99,500 in yesterday's video at Paul Baron. That was the main thing, and of course nothing can be that easy, and we closed just a few dollars above what I wanted. I wish we closed above 100K at the very least to make it extremely clear that we get that breakout. At the moment we are battling to hold the 99.6 as new support. You can see that today we have been already below it, but it's been bought up, and thanks to this triangle and the breakout above 100K, we could see this becoming a green candle and confirming it even further with the closing price of Saturday. What do we need to defend on the daily? Well, we continue to monitor this trend line in here. We continue to monitor this white line there. And if you're wondering why do you have this green thing here pointing at 125 and why do you have this red one at 73? Well, those are the levels that I am getting from my RSI range in here. So we had the breakout on Tuesday, and since then the RSI has been just flat in this range between 68 and 62, not showing anything significant to the upside or the downside, just holding, going sideways after the breakout. So is the breakout confirmed? We can say yes. Is it fake out? Not at all. At least by looking at the daily in here, I don't see any fake out. The only thing that you may argue is that this low is slightly lower than the 63, but really is almost like the same number, 62.6. Is it lower than this one? No, this is 61.4. So let's say nothing is broken yet. When do things get broken? If the RSI takes this high of 69 and it continues above 17 here, then we have that continuation continuation. I will expect that before that happens, the RSI 4-hour breakout, because that is a shorter time frame, sure. And if we start putting lows in here below 61, or even worse, if we break below the white line at 59 at the moment, then we can start talking about the red line. Okay, it's very simple. And that is because since August, this channel has been holding us to continue with this upside that we are currently having with a very strong resistance at top. We need to protect the RSI from coming down below this line. That's what we've been doing for pretty much 5 months. So what are those prices? Well, the support from the white line on the RSI is 96.5. That is what the daily wants to protect versus the 98 that the 4-hour wants to protect. So the daily is allowing a little bit more room to hold. We need to extrapolate those 2 points and make sure that we don't lose the daily at 96.5. We have the bottom of the range at 85. Remember, a rejection from this top calls in the volume profile for a whole journey to the bottom of the range, which is something that we haven't done so far, but with this red candle, that is what the theory says. It's not playing out, but that doesn't make the theory wrong, because it's all about probabilities. People tend to see these patterns that play out with a high accuracy. I'm talking about more than 70 to 80% of the time. They see it failing, and then they say, this video aged wrong. There are no certainties. No video can have 100% a pattern playing out. It's a pattern, it's probabilities. If you fail mathematics at school, you shouldn't be trading in the first place. The red line is pointing at 73K, but I insist, doing a move like this at this point in the cycle is not something that we do based on past performance. Does that guarantee that we won't do it? Not at all. Something breaks, we get a completely different December, and that's all we need to go there. Is it likely? I don't think so. Alright, let's talk about the price action of weekend, where we focus typically on CME. CME is the Chicago exchange. It goes offline during the weekend. It closed at a price of 102.4, which on a normal exchange probably is 100 or even less, because CME is more expensive. But the whole point is that if over the weekend we start dumping and going to whatever price we go, then we will create a massive CME gap. We do have CME gaps in here in the lower range that we are tracking, but we consider low likely to get filled at this time in the cycle. Maybe for later, maybe the summer, or maybe the bear market. If we continue pumping on the other side, if the price goes beyond this point, that is not nice, because then we continue accumulating CME gaps. We have 3 CME gaps. Apart from these 2, we have the one at 20K, which we might never fill. Bull market support band is at 74.5. That is consistent with this 73.5 that we have in here. That can only happen once we fail in this area, assuming that we also fail the bottom of the range at 85K. Alright, with so many levels, I'm hoping that you took note, because later we are gonna look into the liquidity pools and we are gonna see if some things are overlapping. But before going into that, I have to give you the bad news. This is not what I want to see in December. Okay, let's be very clear about that. In December, in this area, you can see that we never went that far beyond the ratio of 1. That means that too many big whales are depositing. When whales deposit, don't overthink that they are trying to hedge, that they're trying to do any weird stuff. Most of the time, if the whales deposit from a wallet, cold storage into an exchange, is because they want to distribute. And these 3 times in here that they distribute over the past period of 8 months, the price had a collapse of over 20%. So seeing that now is going into 135 is starting to put me a little bit nervous. Did we have that? Yes, we had it, but we had it in January, and we are barely now at 7th of December. So what the hell are we doing at 133? So I'm hoping that these readings coming from the inflows and outflows from CryptoQuant, list for free on a daily basis on TradingView, are gonna compensate and eventually bring back down this ratio, as long as we get further outflows from exchanges, which means withdrawals into cold storage, which is bullish. But at the moment, you can see that the inflows are at 33K versus the 2.98 yesterday on the outflows. And I'm sorry if I got it wrong at some point. I'm still a little bit sleeping today. It's been a rough week. Yesterday I worked on 6 videos, including 3 commas, Paul Baron, Coin Bureau. It's crazy. And I hope you're appreciating all the videos on the altcoins, on trading bots, and all those things. And I hope one of them is helping you. You can see that the inflows here on ETFs, which are positive, bullish, of course, they are investing in Bitcoin, have been positive throughout the full week. And on Ethereum, that's kind of the same picture with some very, very impressive inflows as well, particularly the one on the 5th of December of 400. You can see how Ethereum is picking up in speed in terms of accumulations, almost looking parabolic like Bitcoin did in the beginning. Bitcoin continues to accumulate as well. The fear and greed yesterday was at 72. Let's see, today we are at 75. This is still greed, not extreme greed. And on another bitter note, we have the long-term holders now to continue to distribute into short-term holders. Just keep in mind that in the previous cycle, when we were having the biggest, largest leg of that cycle up, that's where the long-term holders started to distribute. And they started doing this pretty much when the price was 11K, and they never stop until 65K. So I don't think that monitoring them can really give us a lot of insights. You can see that they put a low relative to August 2019 when the price was hitting 40K. And I think at that point they went nuts distributing all the way to 65. At the moment, this low hasn't reached the lows of June, which means that they still probably have loads of Bitcoin to distribute if we continue to go in higher. Just remember that if you're starting to think to buy Bitcoin here, you're buying it from long-term holders. That doesn't mean don't buy Bitcoin. You can do it with DCA. I'm just trying to make you aware that if you have a huge amount of cash pile on your desk at this point in the cycle, I wouldn't just deploy it in one single go without any plan. There is upside in my opinion, but it starts to get a little bit more limit, and we should be expecting more volatility, just like we saw once we got past 20K in the past cycle all the way to 65. That's when you start seeing those corrections every month of 20 to 30 and eventually 50%. In the short term liquidity, if we put out of the screen the liquidity below 90, which is the largest in the short term, we can see that accumulations are larger at the top, peaking at 104K and at 102.7. Below there is, but is mild. If you are new to the channel and to liquidity pools, the pools are attracting the price because the market maker wants to take out all those heavy leverage people that put the risk at the same place, calling for punishment. And on the long term, we can see as well liquidity pools in here. We have our triangle and we have all the traders over the weekend with low volume still trading and thinking, where are we gonna go? And you got on this side yellow liquidity with sizes of 88, 86, 20K almost. Indeed, now we have this new tool, so we should be using it. This is the amount of liquidity at the top and this is the amount of liquidity at the bottom. So you can see that there is difference, but it's not that significant indeed. And that's why there is this price action, which shows that there's still not a decision in which direction price will go. At the moment, there is huge amounts of bid in the order book, not as high as we had on the 26th of November, but definitely we are out of this area of red, which represented loads of shorting when we were battling to break above 100K still. Now that we did it during the week, there's all this bid going on. Notice that as soon as we reach 101, the ask comes in and it takes a dip. So if this breaks out, we don't want to see that red, we want to see continuation of the blue. Of course, you need access to this tool. This tool is called High Block Capital. The charts, the links are in the description. By the way, if you go to the tradingparrot.com/charts, you find my 64 charts, all of them with access. You need to have accounts on TradingView to start with. Some others need different things. And if you are having any technical issues to copy this chart, you have no clue how to use them or anything, make sure that you join my Discord community. My team is there and they will be able to help you setting those charts up so you can also monitor them during the day pay if that's what you want. Remember, in this part in here, we have all the discounts, whichever account you want to get to see the same data I'm seeing. You're going to get anything from 30 to 15% discounts. And let's look at the delta, by the way. Let's go here. We get a red delta. Let's refresh. This means that the shorts are slightly at higher risk at the moment compared to the longs. And possibly because of that, we can still see all that bidding taking action. In the order book, I have to drop the percentile lower to see really where are all the orders. We got at 100k and at 110, and below the price we have at 91k chunks of liquidity. And the delta is very sticky with the longs insisting that they can get away with still longing at this area of the range, which for me is a no-go for a long. You do what you have to do with the breakouts that we could have potentially over this weekend. For example, this one on the 4-hour, my breakout there, and that could signify as well a potential breakout as well on the delta, which is pretty much the opposite we have in here, where we broke down, we started a channel to the downside. In here we could start a channel to the upside once again and continue the way up. If you are that bullish and you want to take that risk, make sure that you take measurements to stay safe and not lose your account if you're wrong, because the risk is elevated in here. Every time we hit this channel to the downside, we see a rejection and our full reset back down. Whether we are gonna do that this time or not, no one knows. An interesting level to get hit to the upside is 104k with substantial liquidity there from the past 30 days. To the downside we have 93 and 88. There is only one fair value gap at 102 and a very tiny at 98.7 that we couldn't take fully on the way down. Alright guys, I think I won't have much more time to do altcoins today, so I'm gonna reserve that probably for a video tomorrow, and if not, depending on how busy I am with family, maybe you will have to forgive me and we do that on Monday and we resume with the altcoin videos. Guys, if you want to trade on an exchange top notch, look no further than Bybit. Bybit is offering 30,000 in rewards based on trading volume if you use my link in the description. That also comes with the lowest fees to trade, which is very welcome. And I have 2 exchanges at the moment offering non-KYC accounts. That means that you can open as many accounts as you want with different emails. You don't have to be using a VPN. And the main reason I offer 2 is because some users have told me that in some countries with bluffing, they did need indeed to use a VPN to use it, which is a shame. That wasn't the case just a few months ago. And that's why we offer 2 exchanges. The first one, bluffing, with pretty cool bonuses as well for deposits and for trading volume, lowest fees to trade with the link in the description. And the second one is 2bit, 9k bonus, 40% discounts on the fees, a copycat of Bybit. If you know Bybit, pretty much it looks the same because it's been built by the same people that used to work at Bybit. If you want to learn more about 2bit, I am releasing later today a tutorial on this exchange on Coin Bureau Trading channel. Make sure that you subscribe. This channel, I put 3 videos a week on Coin Bureau Trading. And when it comes to the NFTs that I'm giving away for free every week to 5 different users, yes, we do have NFTs in this community, and eventually they will grant you access to gated communities based on the NFTs and many different perks. So make sure that you get one before that. At the moment, I'm rewarding engagement in YouTube. In the iPhone app, it shows me every week the top 5 most engaged users. If you're one of those, you're gonna win an NFT for free. I'm still missing to distribute 3 out of 5 of them, so stay tuned for that. I will do it over the weekend as soon as I find some time to do that. It's very busy over the weekend, things at home. And I will say goodbye with this picture of the performance of the trading bots. More information in the description. I'll see you on the next one. Bye bye.